What debt relief options are available? Welcome to Tea at Taxevity, where you get insights from insiders, our many clients and friends. I'm Pramod Sharma, your actuary at Taxevity. I help people transfer financial risks with life and health insurance. Our guest today is Doug Hoyes. Doug, what do you do when you're not being interviewed?
I'm the co-founder of Hoyes Michaelis and Associates, which is a personal insolvency firm helping people deal with debt. We've got offices from Windsor all the way through the GTA and up into Barrie.
And you've also got a podcast. I've been listening to it for several months. It's called Debt Free in 30, and it's really good. I didn't realize there was so much that could be said about debt. And I wanted to explore that area in more detail. Could you please tell us what kind of services you provide?
There's two basic services we provide, bankruptcy and consumer proposals. When someone calls our 310 Plan helpline, we ask them about their debts, what their situation is, and most of the people who call us, we don't actually help directly. We're going to say, oh, you know what, you need to talk to a mortgage broker about refinancing your home. Maybe you need to talk to a tax person to get your last 5 years worth of taxes filed, because that's really your big issue. But if they have debts that can be dealt with, we either help them with a bankruptcy or a consumer proposal. And in fact, we now do more consumer proposals than bankruptcy. That seems to be the debt relief option of choice for more people today.
Okay, and I'll be asking you more about consumer proposals because I don't really know what they are. What kind of people come to you for help?
It's a wide range. The average person is about 46, 47 years old, because that's the age where you've been working long enough to have built up debt, but you haven't cashed in your big inheritance yet. Your kids are still at home, probably, or in university. You're still supporting them. You may even be taking care of elderly parents, and you're not yet probably in your peak earning years. So it's kind of the worst possible time when it comes to debt. But we help people who are younger than that and lots of senior citizens. In fact, that's the growing segment of our population right now. Everybody we deal with, though, of course, has more debt than they can handle. That's why they're coming to see us. And in virtually all cases, they're working. They have a source of income. They're either on a pension or have a job. And that's why they need to come to us to get protection so that they don't have to worry about losing a chunk of their wages or some other assets.
Did they make some kind of a mistake which got them into debt?
In some cases, yes. They've spent too much money. In some cases, life happens. You know, you're going through life and everything's going good, and then you have a medical issue, which is, something obviously in your world you help with. So everything's going great. I have a medical issue. I get injured at work. I have some kind of other issue, and I'm off work for 6 months or a year. And so even though we have free healthcare in Canada, we all know what free means, right? That means I'm still paying for my prescriptions, and even if everything's covered, I'm not working. I'm not getting the same level of income. So I may end up resorting to credit to survive. I go back to work, but now I've got all this debt. So I think it's a combination of, maybe spending was too much, but in a lot of cases, life happens. Job loss, marriage breakup, medical issues, and that's what causes a lot of the problems.
So bad things happening to good people.
Yes, absolutely. Absolutely. The vast majority of people I deal with are good people. Things have happened. Yes, you will occasionally read in the newspaper about somebody who did some really bad thing and defrauded millions of investors. Those people aren't calling me. They're calling a lawyer. They're calling a lawyer, yeah, because they're in serious, criminal activity. That's not what I'm dealing with. These are people who, they've got more debt than they can handle. They want to work out a solution. They want to pay what they can. They just can't do it on their own.
Okay, so if someone has too much debt, it means they don't have enough money. How do they pay you?
It depends what we do for them. So as I said, there are two different things that we will do, a bankruptcy or a proposal.
Okay, let's maybe get into those in more detail.
Okay.
Let's say bankruptcy.
So let's start with the bankruptcy then. So a bankruptcy is a legal process. It's governed by the Bankruptcy and Insolvency Act. Obviously, it's not something I made up. And in a bankruptcy, you are required to do certain things. The minimum bankruptcy period is 9 months long. So there's a 9-month period where you're going to be sending me proof of your income every month, copies of your pay stubs, for example, because the amount you have to pay into the pot when you're bankrupt is based on your income.
Okay.
So, and I'm not going to go through the detailed math because that will get a little boring, but in real simple terms, a single person is allowed to earn around $2,000 a month. It's actually a little bit higher than that, but let's keep the math simple here.
So that's kind of like that's okay for their living expenses. If
Correct.
they're $2,000,
Exactly
then
right. That's exactly right. The government has said, because of course this is federal law we're dealing with, the government has said this is how much we think you need to live on, and it's a different number if you're a single person, family of 1, 2, 3, 4, whatever.
Okay.
So a single person around a couple of grand. So if that in the first month of the bankruptcy, let's say you made $3,000. Well, you're $1,000 over the limit. The rules say you have to pay half of that as a contribution into the pot for your creditors. So that month you would have to pay $500.
Okay.
If your income is consistently below whatever the threshold is for your size of a family, then generally there's a minimum contribution we're going to require. We're going to say, okay, it's going to cost a couple $100 a month for the 9 months. That covers all the costs and expenses of doing the bankruptcy. You also lose certain assets, such as your tax refund. So you lose your tax refund for the year of the bankruptcy.
You lose it to who?
We file your taxes.
Oh, okay.
And Canada Revenue Agency, sends the tax refund directly to us.
Okay.
That money goes into the pot, and I keep referring to the pot. Obviously, it's a bank account, not an actual literal pot here. But the money goes into the pot, and at the end of the bankruptcy, that's what gets distributed to the people you owe money to.
Okay.
So you might be making a contribution of a couple $100 a month. It might be more if your income is higher. We would get your tax refund for the year of bankruptcy and any prior years that you hadn't filed yet if there was money coming back. And there may be other assets if you have a very valuable car or house or something like that, investments, things like that would go into the pot as well. Our fees come out of that pot.
Okay.
And they are set by the government. So I don't get to decide how much money I'm going to make off of you.
Oh, okay.
The government says I get this percentage of what's in the pot, and it's a somewhat complicated formula, but that's how it works.
But it's the same as anyone else would get if they're providing that service.
Correct. If at the end of your bankruptcy there's $5,000 in my trust account, it doesn't matter which trustee is doing that bankruptcy, we would all get paid the same percentage of that $5,000. That's how it works.
Okay. And you're saying the term lasts for 9 months?
The minimum bankruptcy period is 9 months. That assumes you've never been bankrupt before and you don't have any surplus income, meaning you're not over that limit that we talked about. If you are over the limit, then your bankruptcy is extended for an additional year.
Oh, I see.
So a first-time bankruptcy, instead of being 9 months, would be 21 months.
Okay.
A second-time bankruptcy is automatically 2 years to begin with.
Okay.
And an extra year would get added to it if you had surplus income. So the length of the bankruptcy will depend on your income and whether or not you've been bankrupt before.
Okay, so we have bankruptcies, but you also said we have something called a consumer proposal, and I have to admit I don't know much about those.
Well, and the reason they're not as well known as a bankruptcy is, although they've been around since at least 1992, the rules were changed considerably in 2008 and 2009 to make bankruptcies more expensive for people with debt and to make consumer proposals therefore a more attractive option. So really easy to understand what a consumer proposal is. It's a deal. So we go to the people you owe money to, and we say, look, I know I owe you $50,000. I'd love to be able to pay you back the whole thing, but I can't. But what I could do is pay back some portion of that. I could pay back $20,000. So fine, we do a proposal where we offer, you offer to pay $400 a month for 50 months, for example. That would be $20,000. That would be an example of a consumer proposal.
Okay, and then you would probably get a portion of that from the creditor?
Correct. Our fee, again, it's exactly like a bankruptcy. The money is going into our trust account. Our fee is a percentage of what goes into the pot.
Okay.
And so every licensed trustee gets exactly the same the same fee. So it doesn't matter if I'm doing your proposal or a different trustee is doing it. We're all getting paid exactly the same.
Okay, that's good to know.
And it's key to understand, I'm not charging you any additional fee. So when you come in to meet with me, I don't charge you an upfront fee.
Okay, so it's not $400 goes to the creditor and then something goes to you.
No.
I'm paying, say, the $400.
Correct.
And then part of that is going to you.
And in fact, the rule is I can't charge you an upfront fee. If I charge you any money before the proposal starts or the bankruptcy starts, within certain time limits, I have to take that money and throw it into the pot.
Oh, I see.
So when you come to see us for the first time, it's a free consultation, not because I'm just a wonderful person. I mean, I am, of course.
Yes.
But that's the rules. So when we quote you a number, when we say we're going to the creditors and we're going to offer them $300 a month for 5 years, that's what you pay. There's no HST on top of that. There's no other fees, expenses, anything like that.
Okay, so if someone needs help with debt relief, then how do they know which company to select?
What most people will do is they'll go on the internet. They'll start doing Google searches. Okay, I'm going to type in debt relief and bankruptcy and consumer proposals and see what comes up. My advice would be, well, go to the websites, read about the person, and see what's there. When you go to our website, hoys.com, you're going to see our blog. You're going to see lots of articles, videos. Like you mentioned, our podcast. You're also going to see what our rating is with the Better Business Bureau.
Right.
You're going to see all the other things that we're involved in. I think the main distinguishing feature about us is that we are licensed trustees. We are licensed by the federal government.
Okay, isn't everyone a licensed trustee in this work?
Everybody who does bankruptcies and consumer proposals have to be licensed by the federal government.
Okay.
And there are about in Canada, 1,600 licensed insolvency trustees.
Mm-hmm.
But there are a lot of people who are not licensed who offer debt relief services.
Yeah, I wanted to ask you about that because sometimes you see billboards on buses, et cetera, and credit counseling and these things. And I've never quite understood what they're doing and whether they're doing something that's even good.
Well, we can debate about whether it's good or not. What they do is they say, hey, you got debt problems, no problem. Call us.
Uh-huh.
We'll give you some answers. And what they do is they charge you a fee to look at your situation, write down what your debts are, who you owe money to. And then what they do is they say, you know what you really need to do is file a consumer proposal. And so we're going to put you in touch with a licensed insolvency trustee to do it.
And they could have come to you directly.
Exactly. So you've paid a fee, $1,000, $1,500, $2,000.
It can be that high.
It can be.
And this is from people who are not doing so well with their money at the moment.
Right. So you can't afford it.
Right.
But you go and deal with one of these, external providers. If all they are doing is referring you to a trustee, then you might as well go see the trustee right off the bat. So I think to answer your question, how do you know who you should deal with? The first question is, who are you licensed by? Who are you regulated by? In my case, I'm a chartered accountant, a CPA.
Right.
I'm also a licensed insolvency trustee. So I have a federal, a license from the federal government to do this. So I didn't just start my business yesterday and go into business. I've actually got qualifications backing it up. So I think that's a primary consideration when you're trying to decide who to deal with. Is this somebody who just opened up a business yesterday and read a book on it and that's why they're doing it? Or is it someone who has many years of educational and licensed experience to be able to do this?
And then also you have offices across the province.
Correct. We have somewhere around 25 offices all over the place. So when you come in to meet with us, you will meet with a licensed insolvency trustee. Yes, we have other staff who are obviously going to help with the process, but you will spend time with the expert, the person who's licensed to do this, to help you through the problem, make sure you understand all the options.
Okay, that sounds like that would be good for peace of mind. What's your key message for the people watching?
I think the key message is debt does happen. Sometimes debt happens to good people. Debt does not go away on its own. As a general rule, it's not going to just disappear by doing nothing. Okay, maybe you'll win the lottery, but other than that, it's probably not going to go away on its own. So if you have more debt than you can handle, you should get help. There are options out there. There are things that can be done, but you're the one who's got to investigate your options, make that call, and start getting rid of the debt, working on that so that you can get that fresh start and have a lot less stress in your life.
What's the best way for people to reach you?
We can be reached on the internet at hoys.com. That's our website, hoyes.com.
Thanks very much for dropping by.
Great to be here. Thanks.